Hi, I'm Ross Mayfield, investment strategy analyst at Baird, and we are back for another weekly video with our friends at Strategas. Today, we are lucky enough to be joined by partner and head of the firm's macro and technical research effort, Chris Verrone, to talk all things markets. Chris, how are you doing this morning?
I'm doing great, Ross. Happy to be here.
Yeah, really thrilled to be talking to you today. A lot to get to, but I want to start with kind of the highest of high level views, which is you all have taken on a more tactically cautious view against what I think I could describe as still a fairly bullish outlook, or at least
Yeah.
over the intermediate term. Could you describe maybe the high level reason for why on both of those near term cautious, but maybe against a
Yeah.
more bullish backdrop?
Well, Ross, I think it's an important question, and you always want to be careful that you don't get too cute kind of around the margin. But if you look at the last couple weeks, we've just been a little bit uncomfortable with the velocity with which interest rates have moved, dollar as well. We've seen this very stout bid to gold, the strength in oil. I just think all of this, at least in the short term, maybe conspires for a little bit more volatility here. I don't want to make too big a deal of it. I don't think any of it is ultimately going to prove fatal, but we are in a weaker seasonal period to begin with. We've done a lot over the last 6 months. I just don't think it should surprise us if this market consolidated or chopped as we kind of move through spring and into summer. When you look at the longer term integrity of the bull market, though, I still think it's very much intact. You have very good long term support, let's call it in the 4850 to 4900 zone. I think if you got to pull back into that neighborhood, you'd be very inclined to buy it. Importantly for us, I would also argue that the leadership fabric of the market is still largely intact. We've seen this very pro-cyclical leadership tone over the better part of the last 6 months. Maybe there's a little hint of some life from defensives recently, but I think by and large, any tactical or near-term reservations we have are just that. They're tactical reservations. Longer term, are the ingredients of a big problem really out there? At least from the insides or the internals of the market, I would say probably not.
That's great context, and especially on the U.S. markets. But I want to pivot a little bit and look abroad. You all have been talking about this. Whether it's U.S. arrogance or home country bias or whatever, we're so prone to looking at U.S. markets, but there's a lot of stuff happening abroad. You all have highlighted Japan for
Yeah.
months. Europe looking quite a bit stronger here. Could you talk a bit about the trends outside of the U.S. that you like?
I think it's been the most underappreciated part of this bull market the last 6, 7 months is just how strong some of these global markets are. Japan is probably the most overt or the most obvious, making new highs for the first time in, call it 40 years, back since late 1989. But I think importantly, the strength in Europe is just entirely unappreciated. The cyclical leadership coming out of the continent, and you see it with the European discretionaries just trouncing the European staples. Some of these really big bases and breakouts and things like European autos and European luxury stocks, the persistence from these European banks, the European industrials have been flat out leadership as well. Super underappreciated when I travel around and talk to when I travel around and talk to clients all over the world. I think people are missing this. Going back to Asia, you see it with Kospi as well. Kospi, which I think is always a good barometer on the global economy, has generally traded pretty good. And you start to put the pieces together and you begin to wonder, okay, Europe strong, Kospi very big. Is there some message here on China? And I understand the maybe philosophical or moral reluctance to want to be long China, but it's important as market observers, we're very aware of whether some type of turn is taking place. And I think the tone from all these global cyclicals, particularly when you look at things like copper and aluminum and these industrial metals, would suggest at a minimum there is a very low bar in that part of the world. And I think the market is suggesting you could surprise to the upside there.
Yeah, absolutely. Under discussed, I think, is the best way to put it. Something to put on our clients' radars. Let's end here with a message from another corner of the market. You've described gold as both kind of risk on and risk off, and I think it's
Yeah.
a something just very interesting to discuss and a good barometer for what's happening. Could you talk about why you view it that way?
I think it's funny for whatever reason gold has this reputation as exclusively a risk off indicator. That's just not what the data says. We went back in our work this week and actually dug pretty deep into this. Just looking historically, gold has acted as both risk on in some periods and also a risk off indicator, as we know, kind of going into 07, 08, it certainly kind of had the risk-off characteristics. But remember gold's strength from 03 to 06, which was a very risk-on environment, and it really kind of led the tape. So it has a reputation as both. So I would be careful just saying, oh, gold's up here a lot. It's certainly a risk-off indicator. That's not what the data says. However, if you look at Bitcoin, it's exclusively, in its shorter life, it's exclusively been a risk-on indicator. So I think from a diagnostic perspective, looking at Bitcoin for a signal on risk appetite or on liquidity is actually really useful here. So if this move higher in bond yields, if this messaging from gold or the move in oil is really going to have a negative effect on, say, the liquidity conditions of this market, I would expect you would have to see it in Bitcoin lower, and we're just not seeing it yet. I mean, even with the big breakout in bond yields this week, I actually thought Bitcoin traded pretty well. So from a diagnostic perspective, I think there's real value in watching it in terms of getting a handle of whether liquidity conditions are still supportive as they've been for the last 6, 7 months, or whether maybe at the margin something may be starting to change.
Chris, this has been really insightful as always. Thank you so much for the time.
Ross, always great, and we'll talk to you soon.